Good evening, everyone, and thank you for being with us today. Welcome to the investor meet of Workmates Core2Cloud Solutions Limited. I am Ruchika Shah from Equiprojects, and I'm delighted to be your host today. Workmates Core2Cloud Solutions Limited stands among India's fastest growing cloud and digital transformation companies, renowned for delivering secure, scalable, and AI enabled solutions. As an AWS Premier Tier Services partner, Workmates offer leading expertise to organizations and businesses of all sizes across India. Today's session will offer meaningful insights into Workmates' impressive growth journey and future plans. Joined by Mr. Kamal Nath, co-founder and CEO, Mr.
Hello.
Debashish Sarkar, co-founder and CFO, Mr. Anirban Das Gupta, Strategy and Growth Officer and co-founder,
Hello, everyone.
and Mr. Mayur Banka from Merchant Bank, Horizon Management Private Limited.
Hello, everyone.
So let me quickly walk you through today's flow. We will start with a short introduction and presentation delivered by the senior leaders of Workmates. This will be followed by a question and answer session where our management team looks forward to addressing your questions. Thank you, and I will pass it on to Mr. Kamal to begin the discussion. Over to you, sir. Sir, your mic is on mute.
Yeah. Thank you, Ruchika, and good evening, everyone, for taking the time out to join us in this session. So in this session, I've been joined by our CFO, Debashish Sarkar, and our Chief of Growth and Strategy, Anirban Das Gupta. The way, as I've been told, for first 15 minutes, we will present to you about our company and talk about how the company started, who are the founders and the leadership, what we offer to the market, to our customers, how we have grown over the past 6+ years, and what is our future plan. And of course, we'll also talk about the various aspects related to the IPO itself. We'll be very happy to take any kind of queries and questions which you have at the end of the 15-minute presentation. And if you feel to ask us questions during the presentation also, we'll be absolutely okay with that. We'll be very glad to respond to your queries. So I will run a short presentation, which I'm presenting on the screen now. Is my presentation visible, Ruchika?
Yeah,
Yes.
it is.
Yeah. So our company was technically started in 2018 and co-founded by a group of industry professionals who are working in corporates to drive the dream of creating a cloud-first services company in partnership with AWS, which is the number one cloud company in the world. So in the last 6+ years, we have grown rapidly and we have achieved highest level of partnership of AWS, which is the number one cloud provider in the world, to reach a stage where we are today. And we believe in the philosophy of mateship, meaning which we treat each of our employees, our partners and customer as a mate. And now as we go to the IPO stage of the company, post IPO, all our investors will also be a part of our community. So before I go to the details of our company, I would like to highlight all the co-founders who have worked in the past in various companies, including reputed Indian multinational companies like HCL Technologies, Tata Communications, Sifi Technologies. And we have collectively, as co-founders, we have more than hundreds of years of experience in IT industry, and to a specific IT digital cloud industry. And of course, our CFO brings 40+ years of experience in finance. So we are and I believe the biggest asset of our company is the set of co-founders who are working like executives. So this is our brief journey. In the last 6 years, we have not only grown in terms of our number of employees starting from scratch. We are a bootstrapped company, uh, but also we have consistently grown in revenue, our profitability, and the number of customers whom we have been able to engage with. And most of these customers, I will rather say 90% of our customers are long-term customers who have been associated with us from from day one till now, from our since the time our engagement started with them. One of the highlights which I want to share with you here is the kind of technical abilities and competencies which we have built as a company, which I and my leadership we strongly believe that is the center point of our success, which is the technology excellence which we have achieved around cloud and specifically AWS and of course other associated cloud technologies. So we also believe that these competencies and the kind of customer projects which we have implemented, that is going to pave the path for our future growth journey also. So we are today, in a very strategic position at the intersection of three high growth areas. One is cloud, second one is cybersecurity, and third one is generative AI. With our deep expertise in AWS and strong delivery and execution credibility, being at the core of our organization, we have very carefully adopted a asset light and annuity heavy growth model. So I will talk about that in little more details in the later part of the presentation. So if you look at the statistics, some of them I have shared with you. We are a 100+ crore company as of financial year 24-25, grown approximately at 100% CAGR for the last 3 years, enjoying a double-digit PAT, 150+ employees, 350+ clients with whom we have implemented 750+ projects. We are headquartered in Kolkata, and we have 9 offices all across India, and one of course in Singapore, which is a new office, and we service our customers from the 3 delivery centers. So this is a little elaborate view of our offices. As I mentioned, we are headquartered in Kolkata, and internationally we have expanded our footprint to Singapore to cover the Singapore and the ASEAN market. We are in active conversations with customers in Middle East, UK, and US as well. So in the coming days, we hope to acquire our first customer in each of these geographies, and that which will pave the way for our global growth. So I spoke about AWS, which is the most strategic partnership what we have. But alongside AWS, we are every quarter and every 6 months, we are also expanding our technology partnership landscape along with the leading technology partners related to cloud as well as other digital services. So this is very important because from being a cloud-centric or a cloud-focused company, we have started our journey towards a broad-based, cloud-driven digital services company. So each of the partnership, what you see here, these are very popular names. Not only will add dimension to our services portfolio, but also will add additional revenue levers for us as we go forward. So this is a little elaborate, view of our leadership. Personally, I have spent 35+ years in IT, digital communication, and data center industry. I have, for 30 years, I worked in 2 Indian multinational companies. One is HCL Technologies, which is one of the top 3 IT services company today. And the other one is CIFI Technologies. So HCL Technologies, when I left HCL Technologies, I was India business head, and I served the position of Chief Executive Officer of CIFI Technologies for more than 12+ years. Our co-founder and managing director, Basant Rana, he was my colleague in CIFI Technologies, He has been one of the very important pillars of the company, serving a very important function of handling both AWS relationship as well as uh, our customer engagements. Debashish is our CFO, co-founder and CFO, who has spent almost 40 years in financial strategy governance and as well as an SME advisory. Anirban, who is there on the call with us, he has worked with me for 20 plus years in HCL Technologies and SIFI Technologies as well. And he drives our strategy and growth office, uh, also engaged in various other aspects of the organization. Anando is also my ex-colleague. He leads, he's a cybersecurity expert. He leads our cybersecurity practice and initiatives. Arunabha, and a young technocrat, the chief technology officer, again, my ex-colleague in SIFI Technologies. So he is our technical brain as well as the operations leader. So in summary, we have been able to come together as professionals, but now turned entrepreneurs, and to build the company bit by bit and to grow it to the by following our vision and mission. So this is a brief snapshot of our portfolio, which is and I believe this portfolio is going to only increase over a period of time. As you can see in the slide, on the left-hand side is the portfolio, and on the sorry, hello.
Yeah, we can hear you, and the slides are also visible. Please go on.
Slides are visible?
Yeah.
Okay. Sorry. Yeah. So so we almost provide a full services portfolio for our clients, starting from assessment, migration, and modernization services. These are very critical services, even before a customer moves to cloud. And of course, after moving to cloud, customer consumes infrastructure, which we manage on their behalf, uh, like optimization, cost control, to make the infrastructure best work by by making the application run very smoothly on those infrastructure. Cybersecurity is given nowadays. We safeguard the customer's cloud infrastructure and the other digital infrastructure with our cybersecurity portfolio. Generative AI, we hear this, what is happening around us, is a very important portfolio for us. We are one of the 64 or 66 Gen AI competency partner. And in this regard, I missed out highlighting something, that we have a premier level partnership status with AWS, which is the highest level of partnership globally. It is not only that, we have also been adjudged as the consulting partner of the year by AWS for 2025, which is a very prestigious award, chosen among I think hundreds and hundreds of AWS partners who are present in India. So these motivates us. These kind of recognition and status gives us more confidence that if we do everything right, we will. We are very confident of our growth. So from a revenue standpoint or customer spend standpoint, we not only do projects, but also we are engaged with the customers in the entire life cycle of their cloud journey on which their digital business runs. So we not only have an entry revenue, but an annuity revenue streams. So just to touch upon this, on a steady state, our annuity revenue potential of out of a customer contract is almost 80%, while 20% is one-time transformation services. So we have diverse industry presence, starting from IT, ITS, financial services, manufacturing, e-commerce, media, healthcare, and a lot of other industries. The top two segments for us is IT, ITS, which also includes fintech companies, which influences or which participates into digital transformation in all the core industries. So that way, through the IT/ITES segment, we also impact a lot many other core industries. Now, although our IT/ITES segment, our FSI segment is more than 67% because these two sectors spend uh, most on digital transformation as well as cloud. But at the same time, I also want to highlight that all other sectors are catching up, and almost 100% e-commerce companies are today running on cloud, which is true for media also. And the headroom for growth in each of these sectors is very high. So the industry where we operate, we want to give you a brief overview. This is a very high growth segment. So India market for cloud is growing more than 26%. Global market is growing more than 21%. And SMB sector in India is growing more than 28%. See, in our growth journey till now, small and medium businesses have played a very important role. In India, this is the highest growth segment among all the segments, startup and SMB. If I add startup, obviously this percentage growth is far higher. Now, the reasons for that is the digital transformation push by the government themselves, okay, and the emerging technologies like AI, Gen AI, cybersecurity, and the kind of investments which are happening in this sector, not only by the service provider like the hyperscale cloud providers like AWS and now the AI tech companies and the data center companies. Those who take interest in this, you pretty well know that the kind of data center infrastructures are getting built in India. And to me, data center infrastructure setup is a lead indicator to what is going to happen in this market in future. Because every time a new data center capacity is being built, 65% of that, this is statistics, is being consumed by the cloud providers and now the AI tech companies. So this means that a huge amount of technical capability and competency and skill sets will be required to implement those projects, those cloud projects or AI projects for our customers. That is why we are bullish. And this we have seen across all industry domains. There is no industry domain where digital adoption is not happening and hence cloud adoption is not happening. So we are very hopeful. We are also hopeful because of the kind of investment which is being made in the Indian market. So this is our growth playbook for the next 5 years. It is quite simple. We will continue to engage with our customers while we acquire new customers. We will continue to upsell and cross-sell with our new customers. We are evolving our portfolio, and we are choosing a very simple philosophy. I mean, with AWS at the center core of our partner engagement, as you have seen in one of the previous slides, that we are also forging partnership with other technology major, and with our DNA of engineering skill sets or of implementation skill sets as well as designing skill sets, we want to develop competencies across the portfolio of our partners. So we want to keep it very simple because we have seen this in the past that if we do it well, we are becoming more and more relevant for our customers. We want to build a bigger talent pool as we grow, including adoption of tools, particularly this is very important in the AI age, so that so the technology can also complement our delivery capability. We need to be continuously innovate because in today's world, if we don't innovate, somebody will come and disrupt us. And the good part is that we are already walking this path. We just need to stay on the path and at times accelerate on the path. So I mentioned that to you. We are an asset light and capital efficient model. So we don't want to invest a lot in building infrastructures or software, but we want to invest the proceedings for building competencies as well as to execute customer projects. We are expanding globally. I mentioned that briefly. We started with Singapore, but we are in active conversations with customers in UK, US, Middle East. We are eagerly waiting for our first customer acquisition, which we call anchor customer, so that we can open up operations in those countries also. And of course, I spoke about the ecosystem also. So this is a simple growth playbook. I think as co-founders and those in the leadership in our company, we have gone through this journey quite a few times in the past, because Indian IT industry as well as the global IT industry has undergone several kind of these changes, and we as corporate employees or leaders, we have gone through this quite a few times. So I will now invite Debashish, our CFO, to give you a brief on the financial overview of the company for your understanding. Over to you, Debashish.
You're on mute.
Debashish, you need to probably unmute yourself.
Yeah. Good evening, everybody. See, our company, we started a bootstrap company in 2018 in the month of November, and actual work we started from 2019 March. And from there, we have come in this 6 years' time, we have grown our revenue. In fact, in last 3 years, we have grown by 92.83%. But if you consider last 5 years, it is more than 150%. And we have maintained our EBITDA margin and PAT margin at a consistently high level because you see, we have been directly with rolling our sleeves. We have been working hard. We are putting our hard work by our own selves. So that is how we have built this company, and we have come at a point where we need growth capital to grow further. Now, this is a time where we are at an inflection point where we need the fund to grow further, and because the potential is huge. Recently in ET Times, you must have all seen that, this cloud market. It's a published article that therefore I'm sharing. Cloud market will be $400 billion into this year. So this is a huge, huge market, and we are planning to take advantage of that because we have got expertise, we have got competencies, and we are building our muscle in form of finance, in form of skill competencies, and in form of our knowledge. Because all co-founders together, they have got more than 100 years, as Kamal has pointed out earlier, that more than 100 years of cumulative experience in this industry. Kamal specifically, I must say that he has got huge, huge experience in data center business and data center explosion that is coming. As he has mentioned, that 65% of that data center that will be utilized almost by all these hyperscalers. These hyperscalers includes AWS, who is the #1 company, and we need to ride on that wave. We don't have any debt so far. We don't have any debt so far because we have got a very small amount of debt, ICICI Bank loan, which we took to build our own office for the first time in 6 years, and that we'll repay with this issue money because we want to remain a debt-free company for the time being. And return of equity and return on capital employed is almost 50%, more than 50% as of date. And till August 25, we have drawn our balance sheet, which is audited. In these 5 months, we have maintained the run rate that we have been following so far. And our PAT, as on 31st August, is 7.21 on a turnover revenue of 60 crores. So we are maintaining the same PAT percentage.
Yep.
This is the balance sheet we have given up to August 25. These are all actuals audited.
Right. So I think with this, so this is the balance sheet.
Mayurji can talk about
Yeah.
the issue.
Yeah.
Mayur, you can
See,
cover
the issue is
this.
a book. The issue is a book building issue. The issue is going to be open on 11th November and closing date is 13th November, which is open date is Tuesday and it is closing on Thursday. So lot size of the issue will be 600 equity shares per lot. Minimum application will be for the two lots. Minimum application. Total issue size of 34 lakhs 23,600 equity shares, out of which there is OFS and fresh issue also. And the issue will be bifurcated into anchor investor, QIB, and the NI part, which is the retail investors. And there will be 5% market maker. Yeah. Sir, next slide, please. Basically as Devasis sir also told, the object of the issue will be the prepayment of the loan, which is 8.6 crore, and out of the issue size of 69.8 crore, working capital requirement is 29.2 crore. Rest will be the general corporate expenses and issue expenses. Yeah. Yeah. Now, Kamal sir, you can take over.
Yes. So, obviously, I think this is one thing you as investors would be keen to know. So we thought of capturing it. And we also have mitigation strategies for each of these risks. I mean, this is very generic and very well known in this sector. There's nothing unique which we have captured over here. But the reason we have captured it like this, that we are conscious of this, and some of the strategies, both strategies and tactical measures which we have already taken in the company, particularly in the last 1 year. This has been already actioned, actually. So we are actually the market where we are. It is less likely to us getting disrupted rather than we disrupting other markets, right? So, and the good news is our principal, particularly AWS, they are leading that disruption. And every day, including, I think yesterday or day before, we have seen how they are also partnering with other AI companies, apart from they themselves building AI infrastructure. So I think we are not too worried about the technology disruption. But yes, in our industry is a very skill-driven industry. And with the introduction of AI and Gen AI, we need to marry the skills with the tools. So we are conscious of this fact, and we will continue to build our talent pool, train our talent pool. We hire a lot of engineers fresh from college, and I must say and highlight rather that our ability to make those engineers match ready, which I call it match ready, the game ready, has been proven. And that is the reason. That is also one of the reasons why we are successful. Our delivery leaders are very young, but very capable. So we operate into a lot of regulated industries like financial services, like healthcare, okay, or pharmaceutical. So there are regulatory risks. But the good news is the services which we operate, the data localization is given. And we are working very carefully on the cybersecurity offerings so that we are not only on the right side of technology, but on the right side of regulations also. We are an asset-light company. Devashish has done a fantastic job in managing the finance as well as creating tactical strategies to protect the company against input cost fluctuation and forex exposure, etc. So maybe some of these, when we go global, will become more critical for us. But I think with the kind of experience what we have, both within the business team and the finance team, we are quite confident that we'll be able to mitigate that. And one of the biggest advantage for us being that is the fact that we have got a business model which is annuity in nature. Okay, so every contract, if you close $100 order, 80% of the dollar will be annuity business or annuity revenue, which has a compounding effect on our growth. So every order which we book in a particular year, the good impact of that is spread across the multiple years down the line. So, and I believe that is the reason why we have been able to grow at 100% plus or around 100% CAGR in the past. We want to
Kamalda,
maintain it.
there are some
Yeah.
questions coming in.
Okay, sorry, I am
Probably
not
be
able to see anything.
mindful of the time.
Yeah. Fair enough. So I'm almost through here. So we will be very happy to take the questions.
I think
Because I'm not able to
Ashish
see the questions because the full
ji
screen
has
is presentation. Yeah.
raised his hand, so
Yeah.
maybe.
Thank you. Thank you for those valuable insights. We are opening the floor for our question and answer segment. If you have any questions, please feel free to use the raise hand feature and our management will be pleased to respond. We look forward to an engaging and informative discussion. Sir, our first question is from Mr. Ashish Goleja.
Yeah, Mr.
Ashish.
Ashish, if you can ask. You're on mute, I think. Yeah.
Ashish ji, we can't hear you.
So till then, let's take another question from Mr. Venkataji. Sir, please go ahead.
Please unmute. Venkat ji.
Sir, we're unable to hear you.
I hope there is no technical glitch because both of them. Yeah, Venkat ji, we can't hear you. I hope you are able to hear us.
Deepak ji, would you like to go next?
Yeah, am I audible?
Yeah,
Yeah,
you're on.
Deepak ji, you are audible. Yeah.
Okay, great. Thank you very much for the lovely presentation. Just wanted to understand first up on, you mentioned 20% is one-time revenue and 80% is your annuity recurring revenue, right?
Right.
So on an annual basis, I mean, what is our general target? I mean, in terms of order inflow. So what is the order inflow we target on an annual basis, of which 80% generally you see as a recurring revenue?
Yeah, you see, this order book goals, of course, over a period of time has increased, right? So this year or for any typical year, I will just explain to you. I'll bring up one slide which I have, I think, for benefit of everyone. So how the revenue gets impacted. Is it visible?
No.
Just a minute. I think I have unshared. I'll just go to the share mode.
Yeah, so to answer you, Deepak ji, it is like whatever is the contract value that we get in, 20% of it is
Yeah.
one time, which is for the migration, assessment, or the implementation part of it. The rest of it, which is the cloud consumption and also the managed services. When the customer moves to the cloud, their infrastructure has to be managed, 24/7. So that managed services, which is our Workmates services, and the cloud consumption, which is the AWS consumption, both of those are annuity, and these are open-ended contracts. So as long as the customers remains in business, their workloads are there on the cloud and they continue to pay us. And more often than not, as their business increases, this cloud consumption also increases directly in proportion.
Okay. So can you just give an example? I mean, generally, when a new client migrate to AWS, so you help them in migration. So that might be one-time implementation. That might form your 20% of your
Yes.
of revenue.
Yes.
So the
Yes.
remaining 80% would be what? I mean, what would constitute the remaining 80%?
Remaining
I mean,
80% is they would see when we are moving them to cloud, they are going to consume certain services of the cloud platform, right? Maybe compute, some storage, some network, some security.
Some
right?
software also.
Some software. So all of that consumption is the cloud consumption portion, which is the infrastructure portion. That is an annuity part of it. The second is this entire infrastructure which I spoke about, somebody has to manage it, either their own in-house team or no, a partner like us. And more often than not, today's enterprises, they do not build very, very large IT teams of their own. Let's have a manufacturing company, a pharmaceutical company. They will not have a very big IT team. Their business is something else. So they outsource the entire managed services piece of it to us. So to keep the lights on of their infrastructure, to keep them running day in day out, and also do some change management, we are contracted, and this is a 24/7 service, and for that the managed services portion comes to us.
Yeah,
So both these things are the recurring piece of it.
Yeah, I would like to cite a real life example. So last year we exceeded 107 crores approximately. But our annuity revenue for this year, which we inherited from last year, was 117 or 115 crores, Anibal?
113 crore.
113 crores. Yeah. So if we are able to maintain this, then we are not so dependent on new order book in increasing proportion every year. Hope
And
it
here,
clarifies.
yeah, I understand. But here it's mentioned whatever recurring revenue you receive, only 40% of that you
In
realize
year
from.
one. In year one. So let me explain this. I
That's
think
it. That's an average. That's a phenomenal of averaging it out, because if we get an order in say March, we'll complete the implementation in say April or May. Then we have the billing for the entire year, 12 months, because the billing for the cloud consumption always happens monthly and the managed services, right? Suppose we get an order in December, we don't have the entire year billing to happen. We have only 3 months, right?
financial year.
Financial year. So
Yeah.
we can only bill them. So if it's a 12 crore simplified, 1 crore per month, 12 crore order. If we get it in March, we start billing them in April, we can bill entire 12 crore. If we get it in November or December, we implement end of December, so we can only bill 3 crores, right? So
So on an average, it
on an
becomes,
average,
I mean, 40%.
I got it. I got it. So depending upon the timeline, which year,
Yes,
in
yes,
which month
yes.
you got that particular
Correct.
contract. So on an average, we see a 40% is a fair number.
Absolutely.
right.
Okay.
Absolutely.
So can you
But
just
the
explain
next year that entire 80 crore, if the 100 crore was the year and 80 crore is the contracted revenue. So 40% of that 32 crore gets billed this year, but the next year that 80 crore is assured.
Okay. So can you just explain this table? For example, FY25, let's say year one is FY25, you got 107 crores revenue. So that 100
Right.
crores refers to FY25. Now, if we go
Right.
to into FY26, how this calculation is being
Yes. So let me explain. So
This is just illustrative. Let me
this is
make a
illustrative.
disclaimer.
This
This
is
is illustrative.
Yeah.
These are not real world numbers. Yeah.
Right. So, but this is the pattern historically, and it is going to be a pattern, in future also, more or less. So, the interesting point to note in this table is we exit in 142, but our entry is 170. How is it possible? It is possible because 170 is nothing but 140 minus one-time revenue of 20 crore, which will not be billed in the next year, and I am also taking out 32 out of here, but I am adding 80, which is a full year annuity, which annuity revenue potential for us. So 170 is nothing but 142 minus 20 minus 32 plus 80.
So 142, you subtracted the one time, and the remaining recurring revenue out of 80, 32 is already included. So 48 remaining you have included. So 122
No,
plus 48
Absolutely,
is
absolutely.
170.
That's
yeah,
right. That's right. You add the
140,
balance 48. Yeah.
right.
you add the balance 48. So that's how you arrive at the entry revenue. Because next
Right.
year, that entire 80 crores will get added, right?
Exactly.
Because
See,
okay. And so
the
how confident are we on this 100 crores per annum, the assumption that we have taken? So that is
yes, yeah,
the major assumption
yeah,
that you have taken here, right?
yes. It is a very good question. You know, so this year we are on track. Okay. This year we are on track. Meaning which, at the end of 6 months, we have booked we have meet our order book goal. The rest of the year, and in fact, we are largest of our contract will be booked in Q2 of this year. Sorry, H2 of this year. Starting from this quarter. So we are confident that we'll be able to meet 100 crore of new booking goal, this year.
Okay.
So we have got a task in hand. You see, so what is the challenge? I mean, this annuity business revenue streams, if we are managing our customers well, that continues. The challenge for our company is how do you maintain this 100 crore of run rate every year and how do we increase it? Now, standing here today, this 100 crore we have assumed that we'll book from India, right? We have not considered the global business here. We have not considered the upsell and cross-sell to existing customers. All the new technologies, the partnerships which we are bringing, those calculations are not considered here. Okay. Another very important element is the usage increase. So digital business is very unique, particularly when it runs on cloud. More the digital business grows, the cloud consumption goes up. And hence, our managed services model is a certain percentage of the cloud consumption. So our managed services revenue also grows up. So all these things go hand in hand, and it's a very typicality of the industry.
So, okay, I understood. I think that would be it from my side. I would let others ask questions. Thank you very much.
Thank you. Thank you for asking.
Thank you. Next up, we have questions from Mr. Naman. Namanji, please go ahead.
Hello.
Yeah, hi, Naman.
Yeah, sir. Can you just present the screen again? The same sheet, the 3-year sheet.
Okay, I'll do that.
Yeah, I repeat, this is again illustrative.
Yeah.
Yeah.
I just wanted to understand. So after this 142, 48 ka number gets added here and it becomes 170. And again, this
Right.
20 one-time revenue. So we are assuming that new customers will come in. Is it?
The new, yeah. So that is the sales
Next
goal
year.
for next year. Next year we
Okay.
will book, right? We are not only satisfied with with the revenue we have inherited, but our sales team, our business team is continuously in the market to acquire more customers. Otherwise, you can't grow, isn't it?
Understood. And the churn, how difficult is for your customers to move from you and get a new client?
Okay.
Go to our competitors.
Yeah, correct. So let me explain. Very good question again, Naman. So there are 2-3 different scenarios. Number one, the customer moves out of AWS. Number two, customer stays with AWS, but we are not the service partner of AWS. Okay. Number three, churn can also be in the form of less use of the cloud.
Okay.
That happens only when customer's business is not growing or rather it is diminishing. Okay. As of now, statistically, our churn is around 2%.
Less than 2%.
Less than 2% rather. Okay. This is just theoretically to be on the safer side, to keep, things simple and look simple and practical.
So currently
We have
we're around 10%.
No.
We are
Currently, it is
showing
less
it
than
10%.
Yeah, on
less than
calculation, but
2%.
actually it is 2%. Okay.
Less than 2%. Yeah.
Correct. This is very illustrative, So
we're just trying to take the worst case scenario over
Understood.
there.
not only that, we wanted to. It is very important for our investor to understand our business model, right? How we have grown 100%. Vis-a-vis a company whose 80% revenue is one-time revenue and 20% is annuity. It dramatically changes the scenario.
Correct. Understood. Okay. One of my other questions was, what is our moat? What is our right to win? And how does this thing work exactly? Do we procure it from AWS and on the business side?
Okay, yeah, correct. See, let me spend some time for your benefit as well as everyone's benefit. How does a cloud project look like? And I will come from the customer side, why customers need cloud and why customers may choose AWS and Workmates. Customers, most of the digital businesses can't run without cloud. Even if it's public cloud, I mean, it has to run in some kind of cloud. So that is for sure, and that is why this industry is growing like this. That is why so much of infrastructure is getting built, right? Number one. Number two, AWS. AWS was the first public cloud company, at scale globally. They continue to be the number one cloud provider. Okay. And they will, and I believe, this is my personal belief, they will continue to be number one for a long time because of the kind of investments what they're doing globally. India is, of course, not an exception. And when I was in SIFI as a CEO, we used to host them, and we know very early what kind of infrastructure they are going to build in the next 2 to 3 years. So we get an early indication of that. This is second. And they are the technology leader. It is not the infrastructure. They are making tremendous amount of services, run on top of this infrastructure. I'll not call them infrastructure company. I'll call them a platform company. How many of you know that DigiJatra, what you use, completely runs on AWS? The CoWIN app during the COVID time completely runs on AWS, and almost I will tend to assume that 60 to 70% of the e-commerce companies run on AWS, unless they build their own cloud. Correct. Very large companies can only do it. Smaller e-commerce companies cannot do it. So they are, and of course, Microsoft and Google have their own space. Microsoft, particularly in the enterprise segment, but in the real digital native companies, AWS is undoubtedly the number one company. So now, why cloud is required? Why AWS is leading? Now, what is our role? From day one, we are very clear that we will partner with one cloud service provider to start with. And then we will, maybe subsequently we can partner with few more. What we have done is we have developed competencies, expertise, and skill sets around AWS, because AWS don't execute projects directly, except for very large customers maybe, and those are very expensive services, right? And they have kept that expensive. So partners like us, of course, there are partners like us who will compete with each other, correct? So moment the customers decide AWS, and even if the customer doesn't AWS, the combination of AWS plus the partner becomes a key decision-making criteria for the customer. Now, why among the AWS cloud partners, why we think we have a great chance? Now, there are only 8 companies in India who are premier level partners. Now, when a customer decides, and particularly in mission critical or business critical or mission critical kind of infrastructures or digital business, the customers need partners who not only can implement, but who can stay in the operations stages of the cloud, as well as the innovation stage, and of course security being one of the very important area. So we have very carefully crafted our portfolio so that it is not the one time, it is also the annuity, and it is also the transformation piece, including the portfolio like cybersecurity to be able to engage with them. So this is what it is. And to be very honest with you, the kind of tailwind which is there today, we are just a 100 crore company. Okay. An industry, Debashish mentioned about some $1 billion industry. So if we stay on the crease, continue to bat, and follow simple things like make your customer happy. Because if you make your customer happy, the customer not only stays with us, but the customer also engages you for additional services, particularly the transformation services, particularly the modernization services. So our game plan is very clear, and Anirban and I and Basanta, Anindo, we have worked in similar industries for long. So we know the pattern. So we simply need to, keep on, continue to do that and stay aligned with what AWS is doing. And of course, in the coming days, you may see us, building, not only building, including services capabilities around other hyperscale cloud providers also, and some of the AI companies also, which we have already started.
Understood. And who are we serving? Yeah, please.
Yeah. Sorry.
I just wanted to add, who are we serving exactly? Are the customers SME companies or mid-tier companies? Because when you mentioned 8 companies are only there which have this thing, your tier 1 wala this thing. So I just
Premier
want
partner. Premier
हाँ,
partner.
are these large IT companies, whether they are not into the business, or मतलब, how does it happen?
Yeah, some of these 8 partners are also large IT companies.
GSIs. Some of
Okay.
them are GSIs like HCL Tech,
Global
Infosys.
System Integrators,
Yeah.
TCS.
India
Okay.
bond. We are talking about India bond companies. There are more than 1,000 AWS partners, and as Kamala mentioned in his earlier, the during the deck, we won the consulting partner of the year this year, right? Which is a huge feather
Right.
in our cap because all of them were in the fray, right? The TCS, Infosys, IBM, Kyndryl, EY, Deloitte, all
Hmm.
of them, right? Apart from, the out of more than 1,080 are called for the partner summit, and we won it this time. Some of our predecessors are like the cognizants of the world, right? So you can just imagine, and they were there in the fray. That's what I would like to say.
Understood. And who are the customers we are serving? मतलब, that
So
was.
it's a mix of both SMB and enterprise. When we started, we were very small, two-member, three-member organization. You can understand if you go to an Adani or a
Hmm.
Reliance, they won't even let us get in.
Correct.
So the start point was obviously the small and medium segment customers near around us. But as we have grown, we are now very large customers. One example, if I may take, is Times of India. They are a very large customer. They are also our customer. One of the very leading uh, NBFC customers, on which most of the IPOs and the financial market transaction happen, that they are also our customer. So the largest IPO of the land, which is the LIC IPO, happened on a platform which was deployed and managed by us.
Okay.
So these are some of the examples.
Understood. And what is the average revenue per customer? मतलब, is it determinable per customer wise, or how does it, and how long
It
is
is
the tenure?
increasing. So, Deepakji, like I told you, Namanji, sorry, we started small. Like then the average was 3 lakh, 4 lakh, 5 lakh, right? Now, when we are bagging orders as large as, a 3 crore, 4 crore, we are in talks 3, 4, customers where, multi-crore annual revenue customers. So when we have more of those customers, the average is keep on growing.
Understood. And what is the sustainable margins in this the industry that we are operating in?
So we have been operating at a double-digit PAT uh, till now, and I think we would be able to sustain that.
Understood. That's all from mine. Thanks for your
Thanks, Naman.
yeah.
Thank you.
Thank you. Next up, we have questions from Anil Sharma. Anilji, please go ahead.
Yeah, hello. Am I audible?
Yes,
Yeah, good
Mr.
evening,
Sharma.
Anandji. Good evening.
Yeah, good evening and many congratulations to you for the IPO.
Thank you.
So, I also manage this website called IPO Central, which focuses on IPOs in India, and
Oh,
it
great.
happens to be it happens to be my primary interest area. So I was just wondering what's going to be the impact of AI on IT business. I'm kind of surprised it hasn't actually been it hasn't come up yet. So, but then there is a lot of chatter around AI's impact on traditional IT, ITES kind of services.
Yeah, yeah.
So, yeah, all
So I will
yours.
take it
I
up.
you
You
want to
want to
take it?
take it?
Yeah,
Yeah.
I'll just give you a small
Yeah.
example, and by that I'll explain to you. So a lot of these technical skill sets are going to be, reformatted in a different shape and form. The IT would still remain, but some of the mundane jobs would be handled by AI. I'll just give an example of our own. We built a tool called IntelliOps, and we've launched it along with AWS. So earlier, our entire help desk, used to happen with, people, customers calling in, raising a ticket. So there was somebody in the help desk who used to pick up the call, raise a ticket, and then based on whatever is the complaint or whatever is the change request, he used to reroute it to the relevant team, and they used to troubleshoot and give back, and solve the problem, right? Or do the necessary change. Now we have removed that entire layer, the L0 and L1 layer, with an agentic AI solution. And that's what we call as IntelliOps. So now when a customer calls, or even when there is a system generated alert which comes in, the AI agent receives the call, troubleshoots it, and 60% of the mundane kind of tasks, it solves it on its own. If there is a human intervention required, or a troubleshooting required, or an analysis required, which that agent is not supposed to do, then it redirects it to the relevant team, but having done the initial investigation, giving those snapshots and the customer problem. So when the engineer actually comes to him, he knows exactly what customer, what was the problem, what is the troubleshooting, what is the current status. He just gives the solves the problem, and so the entire time cycle is changed. And for the 60% of the work that it does on its own, there is no human error, right? Every time it has been programmed in such a way that there is no chance of a human error in that. So that 60% is 100% accurate, and the rest of it is very much faster. So what happens is that entire L0, L1 layer, where we had approximately 25-30 people, we've been able to deploy them in other much more productive areas.
Maybe the innovation areas.
Yeah.
So I'll
Okay.
give you one more example. I mean, see, I will cite two examples. Those companies who have built their business model on the basis of billing resources, heads, number of people, those kind of companies will be in little trouble. It's because AI is going to disrupt this kind of companies most, because they have already built a revenue model which is based on the number of people getting billed. Okay, because AI customer is not going to spend on more people. Customer will make it a combination of for example, if it is 100% people, it will become say 30% AI tool and 70% people. So there is a threat to those kind of companies. I think in a way, in a funny way, I can tell you we probably have a late mover advantage. Okay. So people talk about early mover advantage. I feel that we have a late mover advantage, that we have not built an organization on the basis of people. We have built an organization on the basis of skill sets and resources. And because we are small now, 100 crore company is a small company in comparison to much bigger companies. So for us, it is not actually a disruption, but it's a great opportunity for us to take advantage of AI and embed in our delivery model.
Okay, fair enough.
I hope that answers. At
Yes,
least our
it
side of it.
does.
Yeah.
But
Yeah.
at the same time, I'm also looking at a scenario where, it's not really a situation where we can continue billing the customer at the old rates, or
Correct. Correct.
the market forces will eventually come to a point where they decide that, okay, this is AI has been deployed. Earlier, the profit margins were something like 30%. Now they have increased to 40%, because there is less human effort involved. So is it that we are still operating at 40%, 30%?
Yeah.
Sorry?
Yeah. So let me explain. There are more. 1 minute, Anirban. There are more dimensions to it. Okay.
Mhm.
Think about a customer who is spending $100 cloud spend. Okay. What the customers are doing, and I also mentioned, if you recollect, that we work with customers for optimizing their cloud. So first thing first, what we do is we tend to reduce the customer spend over the years, and whatever the saving comes, those gets repurposed into, or rather, reused. Say 10 rupees. Okay, they get reused in innovation projects, which is in AI, and that is the pattern which you are seeing. No customer is spending less. Trust me, Anil. No customer is spending less. What the change where is happening is, where are they spending the money? So
Okay.
earlier they were spending the money 100 rupees in X. Now they are spending 90 rupees in X and 10 rupees in Y. Now, as a company, if we are not able to engage with the customer in that Y spent, it's a loss for us, which I agree.
Okay, got it. And so you are you are investing into innovative products. Can you share some examples of these industry
Sorry?
innovations?
Yes. Our generative AI partnership with AWS, and plus we are also partnering with other AI companies, and definitely, I mean, the slide which I showed you, in our partnership slide, this is going to be a much busier slide in the next 6 months. Okay, this is where our most of the we have to do most of the hard work there, including of course customer acquisition, business acquisition, etc. And we have grown like that. It is not something which is new for us. We started only by migrating. Then, of course, modernization, cybersecurity, AI, managed services. Now, he talked about, Anirban spoke about IntelliOps. And we are also doing one more thing. I did not show you the slide because of, paucity of time. So what we are doing is by using AI, we are creating productized services. For example, for insurance recommendation, for example, for stock prediction. Okay. I mean, it will be a longer presentation if I start talking about all these things, but we are adopting AI to create productized services so that our revenue stream is not dependent on customers' cloud spend or on the number of resources or on our services catalog. But I'm not saying we are a product company, right? But some of the services we can definitely productize. We have already done. And in fact, we have got active customer contracts also on that.
So we are calling them actually templates. We're calling
Yeah.
them templates which can be reused in the same industry or the same vertical. And all of these are coming as use cases from live customers.
Got it. Okay. I have just one more question and then I will fall back in line. Okay. So you mentioned about this 20%, 80% thing. And so 20% talks about migration and all the
Modernization,
activities.
assessment, yeah, implementation, right.
Yeah. But then the 80% of the revenue is coming from the same customer for managing the cloud. You talked about consumption. So is it you must not be getting the 100% of the consumption of the client,
We
right?
get the consumption of the client as well.
For AWS.
You must
For
be getting a
AWS.
portion. You must be getting a portion of that consumption, isn't it?
No. Portion
No,
of that
100%.
consumption is our margin. So we bill the customer and AWS bills us.
Okay. All right. Got it. Okay. That puts things in perspective.
Yeah.
Got it. Okay. All right. Thanks. I wish you all the
Thank you,
best.
Anil.
Thank you,
Thank you.
Mr.
Thank
Sharma.
you. Thank you.
Thank you so much.
Thank you.
Thank you. Next in line is Mr. Shubham Upadhyay. Shubham, please go ahead and mute yourself.
Yeah, hi. Good evening, everyone. Can you hear
Good
me?
evening, Shubhamji.
Yeah,
Good
good
evening.
Yeah. Okay. Thank you for the opportunity and congratulations on the IPO. So
Thank
my
you.
first question is, what is the breakup revenue as per services like cybersecurity versus Gen AI plus versus database versus managed? If you can give some color on that.
Anybody want to take it?
Yeah. So basically, the cybersecurity services as of last year were constituted about 5%. The migration and modernization piece is within that, the one-time OTC portion, which is about the 20% of the annual revenue. Mostly it has been migration and modernization. And the last 2 years, or rather 1.5, 2 years, is we have invested in the cybersecurity and the Gen AI practice. And if you have followed the industry, last 1.5 years, 2 years, there's a lot of buzz around Gen AI at large, but very few customers have actually gone into production. They have been dilly-dallying on use cases, on POCs, etc. It's only the last 3-4 months that customers have allocated budgets and they have gone into production. Now, that investment which we have done for the last 1.5 years is actually coming into fruition because now we've got the competency. We have certified by AWS. We are one of the only 65, 70 AWS Gen AI competency partner globally. Okay. So we are now ready. We are running multiple conversations as we speak with many customers across verticals. So a few of them are going into production. There are many more which are in the pipeline.
Yeah, okay. My next question is regarding Gen AI only. Like you said, you have deployed a solution for your help desk, right?
Yeah.
So yesterday I was looking through Twitter, and there was this company which has recently raised Giga AI. That company is called, and it has a similar solution. Like it deploys agentic AI for
Yes.
customers, like for customer help. So, is this something like which you can explore and which you can ship out to other
Yes.
companies and clients
That's
as
what
well?
you are
Yes, yes,
absolutely
yes.
bang on. You are absolutely bang on. That's the entire idea. So whatever we are trying to do around AI, we are making them templatized so that those same templates with a little bit of tweak can be taken to customers and from one customer to another customer. Maybe a manufacturing customer, we are trying to solve some problem for him, right? Through AI, that we are templatizing and that can be replicated to other manufacturing customers as well. Similarly, for healthcare, we have solutions around HR. Kamalda spoke about a solution on the insurance prediction of insurance or recommendation on insurance.
Recommendation.
That
Yeah.
with an Australian company, right? So we can very well take that to other insurance companies or similar recommendation kind of a thing for other customers as well.
Okay, okay, that's great to hear. What is your, I would say, let's say prediction? Like, what would be your prediction regarding how much revenue would you be able to generate in percentage terms from this Gen AI vertical of yours?
See,
It will, yeah.
Gen AI per se, pure play, the Gen AI services itself will not generate too much of revenue. Those will be spearheads, those will be arrowheads to get into customer accounts who are trying to do. But because of those Gen AI, whatever, the reduction in cost, the reduction in time to market, and the increase of business for the customer, which will happen, they will redeploy that in other areas of IT. That wallet share, we're going to get into the other areas of it. But if you are not into the Gen AI game, if you are not into the AI game, no customer 6 months or 1 year down the line would entertain any partner who's not speaking that language, who's not
Okay,
trying to
so
solve it.
it will be like an add-on to your service.
Absolutely.
Yeah, yeah,
Okay,
yeah.
okay, understood. Like there has been a lot of talk about annual revenue. Can you give me average length of your contracts, the time with
Yeah,
which?
that's a good question, and uh, that's a secret sauce for us because
Okay, okay, fine.
99% of our customers are all open-ended contracts. People who have been there since day one are still there. People who have started off with maybe a 1 crore kind of an order are now more than a revenue of 10 crores per annum. So as their businesses has grown, their consumption has grown, and our revenues have grown along with that. So very few customers, only government customers which we have shied away till now, they run, a fixed duration contract. But enterprise customers, when they get onto cloud, when they select a partner, they are mostly open-ended contracts.
Okay, and one last final question from my side. There is some related party transaction with Mega Grow, and the consultancy fee has been like doubling every year. So, can you give some color on the nature of these transaction and what
Yeah, yeah.
exactly are these?
I can give that, or Mr. Devashish, if you are there, you can
No,
also.
Devashish, I think he has to leave for station. So
Okay,
he
okay.
texted me.
Yeah. So
Yeah,
I
I don't
can
know.
answer that. So Megagrow, basically, see, they are a partner to us who it's an event management company basically. So from AWS we get a lot of fund, marketing development fund, based on our competency and based on our tier of partnership. So every year we get those funds to do marketing activity, right? Lead gen activity, events, large format events in multi-city we do, where we call customers, we have sessions where we have roundtable and all that. So this is an event management company which does this, manages this event for us. The booking the hotels to the other paraphernalia, making it ready for the event. And this company, Debashish's wife has got some interest in that, and that's why we have declared that as a related party transaction.
Okay, so these funds are coming from AWS. These are not like company funds, if I
No,
understand it.
these are MDF funds which comes to us, and we have to spend those MDF funds for the marketing activities in that particular year, right? So we do a lot of activities, but we are not a event management company. We
Okay.
anyway have to contract an event management company to arrange that. We go as a speaker, we carry the content, we call our customers, but somebody manages that, the entire show. So this company Megagrow actually does that for us. And since we have been growing and we are acquiring more and more competencies, our wallet share in that MDF fund is also increasing.
Okay. Okay. Yeah. Thank you so much, and all the best for the
Thank
IPO.
you, Shwan. Thank you. Thank you so much. Yeah.
Thank you. Next up, we have questions from Ronak ji. Mr. Ronak, please go ahead, ask your question.
Thank you for the opportunity. My question is there any peak contract booking period in a year for you? Like you mentioned, like one of your largest contracts are to be billed in Q2. So is this a repeatable trend in your business?
No,
So,
generally, what we have seen is Q3 is a little lull because of the festivities and a lot of holidays. Other than that, it's pretty evenly distributed. I know in April, just after the financial year opens, April, May, it's a little slow. Then June onward, it picks up. Then festivities, it comes down a bit, and then rest of the months, it is pretty even.
Okay. And like another question is, you have maintained like Mr. Devashish mentioned, like 5 year CAGR is over 100% for revenue, and the 3 year CAGR is about 92%. So are you confident of like retaining this trend of revenues CAGR and PAT CAGR in the future?
See, 100% though, definitely as the denominator grows, simple maths, it is definitely not sustainable, 100%. So suppose, but we have a very, very ambitious uh, target in the next 3 to 5 years. Forward-looking numbers we cannot say, but yeah, very, very ambitious number. I wouldn't say that, whether 100% or not, but yeah, we are pretty optimistic on the way forward.
Okay. And the one more question is like, I would like to know like what is the vision for your company for the next 5 years? Like
See,
which area, new areas you want
five
to
years,
tap?
yeah. 5 years is a very long time today in the world of technology. Okay, so 5 years back, cloud was just, or 6, 7 years back, cloud was just making an entry. It has now reached peaking. There are other cloud plus services like analytics, machine learning, DevOps. All of this is cloud plus and Gen AI, right? So what we have done so far well is we have grown through the SMB ranks. We are a dominant player in the SMB space as far as AWS business is concerned. We would continue to get into more tier 2, tier 3 cities and continue our penetration into the SMB space. And SMB in India itself is a very, very large growth story. That is one. Second is we are also getting into very, very large enterprise customer contracts. Large in the sense 8, 10 crore annual revenue kind of customers, right?
entry revenue.
Entry
Entry
revenue.
revenue.
Entry revenue. So those we will continue to build on those because we are building our sales team. We are, the good part is we have the technology, the competency, the skill sets part of it already ready. Now, as we increase our sales team, we can increase our coverage. We get into more enterprise customers. This is second. The third is our global expansion strategy. We have just started with Singapore as an ASEAN region. The next phase is UK, US, and the Middle East, even maybe Australia for that matter.
Okay, so the your plans to expand globally. So you mentioned that there are premier level AWS partnerships and your AI Gen AI competency partnership with AWS. So when you expand globally, what are your challenges competing with other AWS Gen AI competency partners or premier level partners?
So the challenge, yeah, that I will answer it in two parts. The first is, as you rightly pointed out, and thanks for pointing that out. This premier tier partner and the Gen AI competency or the other 7 competencies that we have got, it is globally recognized. Means if we have acquired this in India, we can go and get the same benefits, or we can get the same benefits of a premier tier partner in any country, right? Tomorrow, if you open an office in US and here, we will still be a premier tier partner. So that puts us on an even keel with a matured partner who's already there for some years. That is one. From a technology point of view, we are definitely ready. The challenge over there is any business acquisition team to build a business acquisition team in a territory like a UK or a US is a very, very costly affair, right? So we have grown by being frugal. We would continue to do that. We will not overspend. However, at the same time, build on partnerships, build on our network. Like we mentioned, more than 100 years of corporate experience between us, and we have a pretty fair large network of peers, friends across the globe. And so we will do those partnerships, get some anchor customers, then build the team, and then grow over there. So land and expand, that kind of a thing. So the challenge is that, even a entry level sales and sales BD or a solution guy, not less than $100,000 or even more.
So we are actually following a very, very frugal. We'll continue to run the company frugally. We are following a very interesting methodology of expanding our global presence, and this is purely because of the network of the co-founders.
Very well put. Thank you for answering my questions.
Thank you.
All the
Thank you,
best.
Ronak. Thank you.
Thank you so much, Ronak ji.
Thank you. Next up, we have questions from Vivek ji. Sir, please go ahead and unmute your mic.
Mr. Vivek.
Mr. Vivek.
Yeah, thank you. So, while you laid out your company's pitch very beautifully, I want to know how much of the tailwinds of AI will be captured by a firm like Workmates.
Yeah, so we have in the last consciously, and we were an early mover here. We consciously in the last 1.5 years, we've invested a lot in the AI space. Invested means invested in skill sets, invested in getting certifications, invested in a competency, right? And of course, we were talking to customers parallelly, and we were doing a lot of POCs. Most of the customers, they were dilly-dallying with a lot of POCs, use cases. They were themselves trying to find out how AI can help, and it was a buzzword, right? Only recently, people have gone into production, very few customers, and more people they've identified, yeah, this is the area that we would want to spend on AI, and this is the ROI, or this is the business case that goes along with it. So now when the customers are now actually getting into the production area, we are well poised because we have the competency, we have the certification, we have the people, and we have several use cases already there, and we are continuing to build on that. And we would also look at, maybe partnerships with some of the other AI companies or ecosystem partners to take their story combined along with our migration, modernization, managed services, DevOps, all of these combined together. It's a lethal combination.
Sir, my follow-up to what you said just now is right now you're, I think, largely reliant on AWS, right? And you mentioned that you will probably be looking at other cloud platforms also. Is it something that is clearly on your roadmap, and do you see like a clear roadmap of growth, clear growth plan for this, than something that is just going to be more an option?
I'll take this question. Yeah. So let me explain. Very good question, Vivek ji. So just imagine, a typical enterprise customer. A typical enterprise customer. In fact, we are engaged in one of them. We are having the discussion
Before you start, Kamalda, I'll just tell one sentence that it was a conscious decision, which you asked, is there a clear roadmap? It was a conscious decision to stay with AWS, and it is still a conscious decision. Yeah, Kamalda.
Yeah. So the scenarios are, first I will tell you what we are going to do exactly. we are going to become a multi-cloud services company, but we may still sell only AWS infrastructure. But we'll have the capability to implement other clouds, okay, or manage other cloud. So this is my immediately this is what I can see, and the journey has already started slowly. Number
Sir,
two,
yeah, please, sorry.
yeah.
Go ahead.
So number two, just typically in enterprises and particularly in large enterprises, right? Most of the large enterprises are multi-cloud. Okay, they are using AWS also, they are using Azure also, and some of them are using Google or a combination of this. So these are all upselling opportunities for us because customers at the end of the day may opt for one single service providers, okay, managing all the three clouds, even if the billing is not passed to them, right? Purely from the management point of view, purely from implementation of say a transformation projects like generative AI. So we don't want to lose out on it. But as Anirban has highlighted, initial stage of our growth, we remain focused on AWS. And I think if you really ask me, we did absolutely the right thing because you cannot, spread across, thin across multiple cloud and then make your own life complex, right? We kept it simple. We have become successful. We are now going to, add more flavors to it going forward.
That also helps with loyalty because the more you're with one vendor, he'll also
Correct. Absolutely.
And that loyalty has helped us. That has been reciprocated by AWS in no uncertain terms.
Okay.
Yeah.
Sir, we are not just participants and well-wishers. We hope companies like yours become larger and dictate the play. But there's this larger debate of, the Indian IT firms and Indian IT ecosystem or even the Indian market being over-reliant on American technologies, whether it is AI, whether it is cloud technologies, etc. And with the kind of geopolitics and the kind of thinking that goes within the White House, which is that every choke point must be choked, right? So this is also a point of potential, let's say, debate or threat or whatever challenge. Are you also foreseeing an opportunity for you to look at working with Indian players, even if they are not established players? Let's say Zoho, and if they have any cloud-related servers and so on, services and so on.
Zoho is a very recent strategic partnership we have forged. In fact, our mailing system, our entire collaboration system, we moved to Zoho.
So I don't know whether you have seen that that slide on partnerships. So Zoho is very much there. And why? Because it is not that because now people are talking about Zoho. Zoho partnership was there before. We have implemented Zoho extensively and we use extensively in-house, right? From CRM to help desk, to ticketing, to now we have mail, right? And a lot of other things. And we have developed that expertise to implement that ourselves. In-house we have implemented. Now we are taking that to a lot of our customers. Some very large customers we have acquired over the last 2-3 months. And it going to grow.
Yeah, Vivekji, I want to also to respond to your question, very interesting question. I want to include this element into our response. Is all of us, be it me, Anirban, Basanta, particularly three of us, we have worked in Indian cloud companies like Sifi, Tata Communications, okay, and each of the Indian cloud companies are also data center companies, and now they are also becoming AI companies. So first of all, we have the expertise and awareness of what can be done with them. I mean, I was leading Sifi for 12 and a half years as a CEO. Okay. So we will take the right decisions at the right time. But yes, I take your point. That remains. In fact, one of my customers with Sifi, it's a Russian company. Microsoft has stopped services to them, right? And that is the reason why they adopted, a homegrown cloud. Correct. Those are situations we need to deal with, but having established services portfolio, in fact, most of these services are actually cloud agnostic. 80% of them are cloud agnostic services, right? So I think you have got a very valid point. But I think as an organization, both from the leadership point of view and for our competency point of view, I think we are reasonably well prepared how to navigate from there.
Sir, very respectable that you have led Sifi. Sifi was a bellwether company for us, at least in terms of internet technologies.
Long time back. That time I was in HCL Technologies.
Okay. Let's say now, apparently, it's almost the government giving a directive to industry and especially technology industry. And you might have seen the statements which are coming from various cabinet ministers, including almost these are probably the extension of the leadership thought, the government's leadership. That Indian companies have to step up. We have to build an alternative. However weak it may be initially, over a period of time, just the size of the market will give us the ability to kind of grow and also do R&D. Does Workmates entertain thoughts of being much larger than the trajectory that you've been on and you project?
Oh, let me answer you this way, Vivek ji. Workmates is, we'll bring that later on. It's way too small in that area. So we have, like Kamal said, we've worked in very large Indian MNCs. And when we talk about the AWSs of the world,
Ajay, by the way,
they are light years ahead.
I am very tempted. I have never worked in any global MNC. I have only worked in Indian MNCs. Vivek. So I am completely
But
with you on the
I have
sentiment
seen both
side.
sides of the
But
world.
Indian MNCs in IT is good enough. These are like really global
Yeah,
firms.
correct.
No, but I have seen both sides of the world. I have worked with IBM and HP. Anindya has worked with Microsoft. So they are the three of the largest MNCs that you can think of. Uh, Talking about AWS, they're light years ahead of any Indian cloud provider. I mean, the kind
Yeah.
of services that they provide, the kind of infrastructure that they provide, the kind of investments that they're doing in India, it is unimaginable. At least in the next 5 to 10 years, they will be in no position to move out of India. No position. Kind of billions of dollars they're pumping in.
In fact, I would have to comment, since Mr. Kamal mentioned that he was ex-HCL Technologies. It is the HCLs and the Wipros of India which have gifted Amazon the leadership, global leadership, by not picking up the
Yeah.
software business. So
Yeah, correct.
I feel that the genes are very strong in the Indian firms, and maybe it is also because of the time that they have spent, the investment that they put in. It's tough for us to catch up when there's almost like a platformization, right? Once you get a few clients, those clients have a ripple effect, domino effect, and the market is more or less kind of captured by them. But I'm just speaking to a conversation that needs to be had by all firms in this industry, and I'm sure you are having thoughts in this space.
Surely. Appreciate it. Yeah.
Thank you, sir. Thank you, both of you.
Thank you, Vivek.
And if this has not been covered, I'd like to know what is the price to earnings multiple and market cap, and which firms are you competing with or comparing yourself with in the Indian landscape which have services similar to yours?
Yeah. So typically, I mean, every investor is asking us this question. There are many similar looking companies like us, but there are 2, 3 companies with whom we think we are at par, or I'm not comparing the size or not. These are Minfi and Rapidair.
Sorry, sir,
And
are these listed firms?
they are not listed firm. They are not listed. So
Can
typically,
you-
what happens in our industry, Vivek ji, sorry for interrupting you.
Yeah.
Most of the companies like us, they go to HNIs or Ps for funding. Okay, most of the companies like us, because companies are little worried about listing themselves in the stock exchange, because the accountability increases, the scrutiny increases, right? So, but we are very consciously going on the IPO side, simply because of the fact that we are confident with the kind of leadership what we have in our team. We are confident we know how to run the company. We need money, and we have been running the company in a very disciplined way. Okay, and going forward, our goals are higher. If we are a listed company, the kind of impression which we'll enjoy in a customer's mind, be it in India or outside India, is very, very valuable for us, for a company of our size today, right? We may have names, in the leadership, who has worked in other, good companies, much larger companies. But at the end of the day, we are a small company. It has got its own benefit, but it has got its own entry barrier, right? I believe with our AWS Premier partnership, I believe if we are with that, if we are able to get ourselves, if we are listed in exchange, I think it's a great combination, and hence you will not find companies like us which are listed in stock exchange. Okay, and many people have asked me, including investors who have met us, in the past, why you did not go to the P's. Okay, this is a very natural question which comes, and we have deliberated on that, and it is not that P companies are not approaching us. I mean, the day it was declared that I've joined Workmates. I mean, my mailbox is flooded from not only in India, outside India, the P's is taking a lot of interest. They straight away want to acquire you, but we are not. You see, all of us, all the co-founders, we have passed the stage of corporate, our corporate ambition. Okay, we have seen the best of our time in corporate. Now we have come all together to create an institution, which will be respected in the industry. So that's our goal.
Very nice, sir. Sir, in the RHP, I noticed you compared yourself with Persistent, Orient, and LTI Mindtree. So, is it which portion of the business is it broadly? You think those are the right?
Only cloud business. Only cloud business.
Only cloud business.
Only cloud. They do many more things than cloud, but I mean, to be very specific, I think Rapidair and Minfi are the two companies, and one company you can, I'm sure is Blaze Clan. I mean, it is a good company which got sold out to ITC Infotech.
Yeah, it got acquired by ITC last year, but on 480 crore or something like that. Yeah, the Pune bond.
Okay.
Another company called Cloud4C is a very interesting example. Cloud4C got acquired by Capgemini, right? So it is a it's an Indian cloud and IT services company. Okay. The reason, our kind of companies, if it is built on competency, if it is built on just reselling and all, these are not valued. If these companies which are built on competencies, they are very highly valued, because these large companies, even they have very large customers or multiple number of customers, more often than not, they are not great in innovation.
Yeah, mostly they are into body shopping, into resource. Yeah, we are not into that game. We are into the innovation play.
Okay, sir. What is the P ratio now at IPO?
I think
Mayurji.
15.
Yeah.
15.
And the market cap would be
265 crore post.
265. Sir, I missed the portion about the projection of your growth. It's been good so far, but what would be the rough CAGR top line and bottom line next couple of
going forward?
Yeah.
You think,
we cannot comment on this.
We cannot comment on that, but yeah.
See, I can tell you historically, we have maintained about 13% PAT, 12 to 13%, double-digit PAT, I would say. And we are pretty confident that we'll be able to maintain that.
And the last 2-3 years top line growth, CAGR?
Last 2-3 years, we have grown more than 100% CAGR. Okay. Approximately 92, I think, and near to 90, sorry. Near to 90.
So you have spoiled us now. We are going to expect only this from you. Okay.
You get only your best wishes, and if you get, and if I mean, we are also, some of our investors are actually telling us that we'll give you business. Yes. I mean, yes.
Actually, we are looking for that. Actually, it's not just the money that we're looking at. This networking over the last 1 month that has happened with a lot of investors, a lot of anchor investors and all of that. We were looking at those connects also, those guidance also. Somebody who comes on board, we would like their network, where we can go and, showcase our skills and our whatever the products that we have built.
Sir, which of you should I stay in touch with? Because I might have some thoughts in this direction.
On the business side, I think me and Anirban. So you're based out of Mumbai?
Bangalore. So if you can let me know, give me your WhatsApp number, then maybe I can.
Yeah, my number is
Vivekji, sir, we will share the numbers with Vivekji.
Yeah. Okay, you'll share it with me. Okay, great. Thank you so much. So good luck, sir. A very, very nice story, and I hope
Thank
the
you so
best
much.
things turn out for you.
Thank
Thank
you.
you so much.
Thank you. Thank you.
Thank you. Sir, we have a few questions in the chat box. Would you like me to read it for you?
Yeah, please.
Okay. What is the loan amount of the bank you mentioned and how much of the debt you will be using it?
8 crore.
It is 8 crore.
8.6.
8.6 approximately. Why
Okay.
you can take these questions here.
Okay, next is what are your internal targets for converting a new landing zone customer into a full managed service client in 12 to 24 months? Example, revenue per customer, services adopted.
So if I've understood the question properly, almost all our customers, okay, come with managed services mix in our engagement. Almost all. So if we when we acquire a customer, just after implementation cycle, which may sometime vary from 1 month to 3 months, just after 3 months, the annuity revenue, you know, keeps building.
Okay, sir. Uh, are we planning to open more offices or branches?
Yes.
Yeah,
So
globally, definitely we will, like we said, we'll expand, and also in some of the other Indian cities.
we are also opening, we are, because of the growth we are seeing in the tier two cities. In future, those will be small offices more for business acquisition, which we are going to open. Yeah. So completely based on merit. I mean, some market. In fact, we have got a sales presence in Coimbatore, Madurai. Sorry,
Madurai, we have
in
in
Madurai.
Jalandhar, we have
That
in
belt.
Raipur.
Yeah, correct. So those belts we have people, because those tier two cities, particularly the small and medium businesses, those are growing.
Great, sir. So that is it from the question side. And if there are no further questions, we shall conclude the meeting.
Yes,
Yeah.
thank you.
I should thank Ruchika, very nicely conducted.
Yes,
Thank you
Ruchika.
so much.
Thank you.
And thanks to each one of you who joined the call, taken out so much of time on a Friday evening. Really appreciate, and for all the questions. If you
Yeah,
have
the quality of questions were
yeah,
pretty good.
and
Very
if you
nice.
have further questions, you can probably reach out to Ruchika, and we can have them answered through them. Yeah.
Yeah. Thank you all for joining us today.
Thank
We
you.
deeply appreciate the management team for sharing their valuable perspectives. And we thank each and every one of you for your time and ongoing confidence in Workmates. Yeah, thank you all for joining.
Thank you.
Thank you so